foreign tax credits. The question I got on foreign tax credits was fairly generic, and it just asked, please explain or discuss the foreign tax credits that should be disclosed on the IT14. Now, the foreign tax credits is, I mean, I could literally go and do a full day seminar on foreign tax credits and still not be entirely done. And that's obviously beyond the scope of what we can discuss in today's session. So what I wanted to do was a little bit more of a highlights reel on what it is, on what the key principles are you need to remember when considering your foreign tax credit. Okay. So first things first, whenever you are wanting to claim a foreign tax credit, you actually have to have foreign income. And that income needs to be disclosed on a gross basis. So if, for example, you are earning foreign rental income, you don't go and disclose the profit and then the tax is paid. You disclose the gross rental with all of the expenses. Okay. You then also have to disclose the full amount of tax that was paid on that amount of foreign income. So there is no net disclosure here. You always have to do this gross. But probably the most important criteria, which is often conveniently ignored, I feel in some cases, is that in order for you to claim the foreign tax credit, it's not enough that you must have paid it. You have to be able to demonstrate on request that that foreign tax was correctly paid, that it is not refundable, and that it was actually that the other revenue authority actually had the authority to levy it. So, for example, I came across a scenario the other day where we had a South African company where dividends tax had been withheld by the subsidiary. So they had an investment portfolio, I think it was the UK actually for that matter. They had an investment portfolio in the UK, and when the UK paid the South African shareholder their dividend, they withheld dividends tax at 30%. Right. Now, as in of itself, the fact that the UK withheld dividends tax would make it a foreign tax payable. I would be disclosing the foreign dividend in my income tax return. So in theory, I'd want to claim the foreign tax credit. The problem is that 30% is not actually the correct amount of tax. The UK never had the right to levy 30% because the double taxation agreement caps the dividends withholding tax that I should be paying to the HMRC at either 15% or 5%. So in terms of the law, I actually have a problem here is because I've paid 30, but I should have paid either 15 or 5, depending on the criteria. So when I'm doing my foreign tax credit submission, I cannot actually use the amount I physically paid because I should be going back to the HMRC, putting my hand up and saying, guys, you took too much tax. Give me the money back. You applied the DTA incorrectly. And what I find a lot of people do is that they don't actually consider that. They don't consider whether the tax was actually correctly raised in the first place, number one. And they just go, oh, well, SARS can just give me a credit because it's too much of a hack to go and argue with the other Foreign Revenue Authority. The problem is that when that foreign tax credit then gets audited by SARS and they start asking for supporting documentation, SARS is perfectly entitled to disallow the full credit because the law in terms of Section 6 Quat states that the credit is only available to the extent that the tax is payable and not refundable. So if you should have gotten a refund but just chose not to do it, you can't claim a credit on that amount. So please, please, please be very careful with these taxes. It's not enough just to have an invoice or a receipt that shows, hey, look, I paid foreign taxes on a foreign amount of income. You have to actually be able to show that that amount is a final tax. and has been appropriately raised. All right. So that's the first really big set of misunderstandings, is the fact that it cannot be refundable and the tax must have been correctly raised. The second big misunderstanding is that when you go and look at the amount that I can claim as a credit or as a rebate, is the amount of the rebate is equal to the amount of tax paid on foreign income included in taxable income. So if you've got any exempt amounts or if you've claimed any deductions against that foreign income, you're going to be able to claim a lesser credit. Right, so just to take a simple example, take a read through that, think it through. All right, so in this one then, I'm hoping that you've realized that I'm going to have gotten cash of 8,500 Rand because there was a gross amount of 10,000, 1,000 Rand taxes, bank charges 500. So I got cash of 8,500. First things first is that my taxable income is actually going to be the 10,000 interest received minus the 500 bank charges that I paid. So I'm going to have taxable income of 9,500. I therefore have not included my full foreign income and taxable income. Therefore, the amount of my rebate is going to be limited. So I'm only going to be able to take of my 1,000 Rand foreign taxes, effectively how much of the foreign income was actually included in taxable income. All right. So I'm only going to be able to claim a credit of 950. Right. The way the IT14 and the IT12 currently recognize this is you don't actually go and do this apportionment. The apportionment is done for you by the return, right? But when you're checking for your own purposes to see whether this is actually being correctly calculated, please remember to take this pro rata into account. It is not the total tax paid, it's the amount of foreign tax paid on the amount of foreign income included in taxable income. Okay. There's also a second limit, which then limits the rebate to the amount of South African tax payable on this amount. So, for example, in my is if the dividends tax rate actually was correct at 30%, using my earlier example, then my corporate tax rate's only 28%, going to 27% soon. So therefore, I would not be able to claim the full tax payable. The limit would cap it at 28%. Okay. So if you're looking for the actual withholding, if you're wanting more information on it, again, there's a fantastic interpretation note, which is available on this particular topic. It's interpretation at 18. And as you can see, it's 127 pages because there's obviously a lot of nuance that I can't discuss in this because I'm doing the Contiki tour of issues in the broad overview of issues. But this goes through exactly what do we mean by final, how do we do the conversions, what documentary proof SARS requires. So that's the last point I'm actually going to just look at here. Everything else you can go and look at. Please also remember if you have claimed foreign tax credits, that as supporting documentation for your foreign tax credit, you are going to need a statement showing what's the tax year, the foreign tax year this was received in, what is the exact name of the tax and which exact country and jurisdiction was it paid to, what's the law under which this tax is imposed, and is this a national, state, or local authority that is imposing this tax and the name of it. Right, and I can already tell you now that most people don't have that information. And then in addition, it then splits the rest of the information too with, was it withheld by a third party? Did you submit a tax return? So effectively, was it a withholding tax or was it a submission to the revenue authority, separate documentary criteria, and then also whether you were required to submit a return or not. All right, so that's going to be the documentation that you need, and it goes through it in detail here as to which one you should be applying. Okay. I know there's a lot of detail in there. Generally, on the IT 14, if you're showing a coding for foreign income, then it should pull up the ability to put in a foreign tax credit. If you are starting to have practical issues with actually the disclosing the foreign tax credit, then please escalate those as soon as you can to your RCBs or report them, because that may actually be an issue with the actual IT14 itself. All right. I don't think they've issued the new one just yet, so it should still be working off last year's and working. But yeah, they are starting to test run the new versions. So please keep an eye out for that as well.